All right, cool. Thank you for that. Steve, are we doing a webinar today? Yes, Steve, you are not on the webinar, I don't think. Yeah, maybe. Yeah. Okay, cool. Let's go. We're going to go bar by bar. All right. So what we're looking for, basically, look, I've already missed this one, but these sorts of setups right here, right? Everybody that knows my trading system knows we're looking for overbought in a downtrend and some rejections, bearish engulfer. Okay. So we're going to go through, right? And we're going to wait. So now that we have overbought, we're looking for a price action. Okay. We're looking for price action that says that, hey, we're going to continue down from this area. What we can do now, right? So see how prices come up into this area of resistance through here. We've got this little rejection, bearish engulfer. We can go ahead and set 100. I'm going to go 140 pip stop loss. All right. 140 pip stop loss. We're not going to set take profits. We're going to basically just close the trade manually as they come, or with a trailing stop loss or whatever, how we decide to do it at the time. Risking 1% on this account. This account is, again, it's back tested account, so it's not a real account. It is 100 grand. You'll see the equity floating profit and you know, percentage of that sort of stuff here. All right. So let's get through, right? So right now we decide to sell that trade. That's going to set our stop loss. We're selling it based on overbought, right? Rejection. I mean, it's not the strongest bearish engulfer, but I'm happy to take it. We're also at 50%. We bounce off 50, a little bit if you want to be more particular. 50% right there. And we go from there. Stops above that high. And let's see what happens. So right now, we're sitting at a 2.24% return, or on a $100,000 account, 2.2 thousand. We're going to continue to hold this trade. On the next higher low, we're going to continue to, again, this is not an entry either, right? So I get asked about this a lot. See how we have this stall and then just a big smash bar right there, big bar that smashes down. I don't take that setup, right? Reason being is I have not back tested it. Probably a good time to start back testing it. I have not back tested the actual setup. So I don't know how well that works when we have just a push reverse. As you guys know, I like to wait for those rejection candles, like those kind of setups right through there, okay? So I'm not going to take that. Obviously, I think we just saw that it worked out when I went back a little bit, but I'm not going to take it anyway. What I'm looking for is the pullback, oversold, go from there. So right now we're at a 4.52% return. So a 1 to 4.5 risk reward. We can view our trades, go to our account, trades right here. So we review the trades open currently. And from there, we can either decide to close a trade, we can leave it open. This one, we're at a 4.5%. I'm just going to close it. So we close the winner. Our account now it's up 4.52%, right? We're going to look for another trade now, okay? We're just going to keep going until we get overbought. No overbought yet. Now on the 1 hour, I'm sure this would be an overbought, but yeah, we're not doing the 1 hour. All right, here we're starting to come into overbought. We've got this nice little rejection. We're just waiting for some price action that lines up. Here we go. Now you could sit there and go, oh, inverse head and shoulders. We're not doing that. We're just basically trading based on, again, you know how we always talk about have the push up, the rejections, little consolidation breakout. That's your take. That's your entry right there. So our stops, we want about this particular trade is going to be 316. And we're going to sell. And we're going to see how that goes. Let me get a little bit quicker. And the back testing is extremely boring, isn't it? Again, here's a trade that I would not take, even though we're overbought. I would not take that one, right? Reason being is the reason I wouldn't take that one is just there's not enough rejections. There's not enough sort of. It's too close. Well, obviously, you know, we entered here. I wouldn't take it anyway because I'm not scaling in. But if it didn't have this trade currently open, I would not take that setup only because it's not a deep enough pullback for me. Sure, it's come back to here. You have this little head and shoulders and stuff, but it's just not a setup that I'm comfortable with taking. So we're going to keep going. Continue to hold this trade. Once we break these lows here, we can now move this into break even. How do I move that? What do you say? Tiago, if you press visual mode, you can drag the stop loss. Anyway, we'll say it's breaking in. Keep on going. Potential sort of overbought coming in now at this bottom of support. Resistance, sorry. If we get this bearish engulfer. So these are the candlesticks we like to look for. Okay. So the candlesticks are there. From that high to that low, we're at a 61.8% pullback. We got these 1, 2, 3, 4 rejection candles. Right. We're at a 5 to 1. Oh no, sorry. Where are we? We're only at barely at a 1 to 1. So we're not going to close that trade yet. We're waiting for a bearish engulfer. There we go. There's our entry, right? So we enter based on that. So I'm getting a lot of questions. When you mean how many rejection candles do you like to see before? Jan, no, there's no specific. It can be 1, it can be 2, it can be 4, it can be 5. No specific amount. As long as I have 1 rejection, I'm happy to look at taking this trade. Alex, yeah, it's soft Forex. It's actually a pretty good backtesting program. I used to use Forex Tester 3, yeah, this one's 100 times better. All right, so we're waiting. Back at break even on this one, above the 200. Probably getting stopped out here, but if not, we're at a nice resistance level. If we get a setup around here, I wouldn't mind taking that. Right, we're getting some divergence happening here. Okay, so divergence happens when you got price in an area of resistance. It's making equal highs. However, you can lower highs on the stochastics. See what happens. So that is a potential entry right through there. So you've had the rejection candles. Rejection, 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 rejection. You've had this little push up above the 200, tried to come up, fake out, push back below, close below those rejections right through there. That would be your entry. In a live market, I would not take this because I've already got one open. Back testing purposes, sure, let's take it. Right, where would we enter? I would enter here. Stops, I'm just going to get 200 pip stops. And go. Whoop, wrong one. So I accidentally put 20 pip stop loss and not 200 pip stop loss. Right, let's go. See what happens. Coming down. Market's going into a bit of a consolidation at this point. We continue to hold our trades. We get stopped out. We get take profit. Who knows what's going to happen? If this, okay, here. So if, I was going to say, if it comes down to here, then I'll look at closing probably both of them. But we'll see what happens. There we go. Stopped out on that one. Still got this one going. Now we're above the 200 actually. So we'd be looking at buying it technically, but we're not going to close that trade because, well, to play out the probabilities, you need to know every single outcome if you don't close the trade, okay? So we're still up to 0.something%. And stop down that one. But here we're starting to get another possible entry. All right, so market's oversold. We come down to support. I probably personally would be happy to take that. 110 pips stop loss. Let's look at doing that. Reason being is obviously we've come down into support. Okay, we broke above here, come down to support. We're at a 61.8% pullback, a little rejection candle. That one, it's not a massive engulfing, but you know, oversold. I like to get a little bit aggressive sometimes. Let's see what happens. All right, so almost stopped out. Market comes back up. Ideally, that would be a much better candle to enter on. So that would also be an entry, stops below there, but we're in now. So let's look at holding this one. Again, just waiting for pullbacks, oversold. So here we're getting a pullback, into this little support level. We're oversold. It's at a 50%. If we get a, there we go. I'm going to take that, right? So we've had this little pullback into support, oversold, 50%, rejection, bullish engulfer. Again, I don't like scaling on live trades. Back testing though, we're just doing it. I'm just going to buy into that one. We're going to leave that. We're going to let that go. So this is a part about holding trades, right? This is a part about holding trades where you sort of, got to build up that equity. So now we're at 8.16%. If you want, you could close this trade. The first one anyway. So the first one's up 400, let's say basically 900, 500 pips, or you could trail your stop loss. I personally would be trailing. I'd start trailing this one and I'd move it to this entry here. And then I'd move this one to break even. So if it does come back down, you still make profit. You get out at break even on the next one, right? So you're not technically losing, you're still making some profit, and you'd be making 230, 240 pips or something on that one. But yeah, so for the purpose of this, I don't actually know how to trail the stop loss on this backtesting program. Can't drag it. We're just going to sort of manually close them based on, I guess, reason. All right, so I'm probably going to try and get up into there and then see what happens. There we go. All right, so there's resistance. I'm just going to close the trades there. So if we come here, you can see that we close winners. That trade right there is 5.8 thousand, 2.2 thousand. So in terms of percentage wise, it counts up now 10.52%. Yeah, that's all right. I'll figure that trailing stop loss out later. Again, moving on, waiting for the next pullback. Oversold. No, not to my liking. Here we go. We get a nice pullback. There's your entry right through there. Okay. Price comes down to support, rejection, bullish engulfer, oversold. Our stops, we're going to go 200 pip. And Kelly, you asked the question about stop loss. If I prefer to use a small stop loss, would this same style work on a lower time frame like 2 hour? Yeah, of course it does. It works on every single time frame. The only difference is if you have a small stop loss, prepare to be stopped out a lot more. Your win rate might be lower. That's all. Because when you have a larger stop loss, obviously you can hold through a little bit more of a drawdown before it comes up. Small stop loss, you might just have a lower win rate. Better risk reward though, but lower win rate. So it kind of just evens itself out. But just don't get discouraged if you do lose more often than not. Oh, I forgot to enter that trade. Yeah, so we're going to buy this one. Stops, I'm going to go 210 pip stop loss. Like you could set your stop loss right through here. Like a lot of retail traders like to sort of just have a little tight stop loss. The only problem with that is, I think as we just saw, that, right? And look, I probably might get stopped out on this one anyway, but you're going to get stopped out a lot more than, more so than not. So here now we're below the 200 EMA. I'm not looking at taking this trade here. If we do come back and close above the 200, above that, I will take the trade. And I'll explain if we do get up there, why. Doesn't look like it. Maybe. All right, so now we're creating consolidation. It's either up or it's either down. We don't actually know yet. If it's above the 200, we're buying it. If it's below it, we're selling it. Okay, so we're selling. You can trade this breakout if you do wish to trade the breakout. I don't particularly trade breakouts, but if you do, that's not what we're backtesting anyway. This would be a good trade as a breakout. Stops above there, and then just trail the stops. But I'm going to wait for the retest. Possible entry, right? overbought. We're just waiting for bearish engulfer now. 150 pip stop. All right, so on this one, we pull back 50%. We have multiple rejection candles, right? Little consolidation. Have the break right there. That's what we're looking at taking now. So we go. I'm going to go 155 pip stop loss. Sell that. I just want my stops above the 200 EMA. Get a little quicker. Probably going to get stopped out. There we go. Stopped out on that one. We're still up 8.34%. All right. So carry on. Let's see what happens here. Now, right now, we're neither sort of, we need to break this high in order to sort of at least get back up into here. So if we break from there, okay, so the market's gone into consolidation. So when it goes in consolidation, what do? We're waiting, right? We're not trading yet. We're either waiting for a break below or break above. As I talk about in the webinars, you know how I always say either wait for a break below or break above. That's what we're waiting for. We can just sort of wait and see what's going to happen. Right now, there we go, break above. Now, as a breakout trader, sure, you can buy this. I'm not a breakout trader. I'd rather wait for a pullback. Okay. Now, on the pullback, you're not always, so on the clean break of after a consolidation, a strong consolidation, like not like a little, you know, 1 day consolidation, but this consolidation went from the 12th all the way to, you know, so about a month's consolidation. Once you get a big consolidation break, you're probably not going to get the oversold pullback on the breakout, on the retest, right? So right now, we're starting to get this possible retest right here. It's not coming down to retest this level, but it is making its own new support level, right? Comes up, probably 50% pullback from there, I'd imagine. Yeah, 50% pullback from that engulfer, right? So now you've got these rejection. If we get a breakout from there, I'd be happy to take that. There we go. We can take that. 150 pip stop. We're going to buy that. No take profit set. We're going to see what happens here. Okay, so now we're above. Smashing past there. At this point, you can set it to break even if you want. You don't have to, but you definitely could do. Now we're starting to get a nice retest at this level. Let's see what happens through here. There's another nice break and retest of that level. 150, I'll take that. So remember, this particular trade, we're up 370 pips at the moment. Looking to continue holding it here. Okay. Now, if you weren't using the stochastics, obviously not everybody likes to use stochastics. You could take this one. I'm not going to. It's too close to this entry right here. But that's another one you could take, right? You've had the consolidation, break, just the same as this one, consolidation, break. That was on the retest though. So yeah, you could sort of do that if you want. You don't have to though. Now, this particular trade right here, right? We are coming into some hefty resistance level. We are up 501 pips on that one. I'm probably just going to close that particular, the first one, not the second one. So the first one right here, I'm going to close that one. Is that the first one? Yeah. All right, so we're going to close that one. We're going to leave this one open though. Nope, my dumb ass just closed them all. Anyway, we're up 13.26% now. Again, waiting for the next oversold. That's all you're doing. This is literally as simple as this. Like, it's really not much more complex. Oversold. I'm not going to take that one personally, but yeah, would have worked out. Here we go. Okay. So now we're coming back down. We're looking for a possible entry. Nothing too exciting yet. Here we go. So here's your entry. Comes down to support right through there, oversold, double bottom the stochastics. You could look at taking that. If you just want to go, let's say 200 pip stop. Spot. Well, again, 20 pip. See what happens on this one. And again, with the trading, you don't want to show stops too early. You don't want to sort of panic and get out of a trade. This one we're up about 1.5% at the moment. Now we're up, down. So at this point, actually, when it did break through here, that's when I would set it to break even, and I'd be waiting for the retest and continue up. So right now I wouldn't close a trade, but we're just going to pretend it's at break even. If it gets to break even, I'll just close it manually anyway. There we go. All right. We're just going to close it all because again, we're assuming it's at break even. So that one resulted in really nothing. So now we're possibly starting a new downtrend. Let's get rid of these so we don't need them anymore. It's more consolidation than anything at the moment, so I'm not getting too excited. Okay, now we've had the break. We're looking for a retest. Waiting for that retest. Here we go. We're coming back up now. Here we go. We're overbought. Now we're just waiting for, let's see if we get a strong retest of anywhere. Yeah. It's coming too far up now. Am I going to take that? Yeah, I'll take that. I'll have a 250 pip stop. Sell that. Reason I'm taking it again, I'll talk you through it. Had the push up, push down. No strong rejection, but we are at a nice resistance. We are overbought. We're already coming down here. Strong bearish engulfer. Let's take it. Let's see what happens. So it's playing around a bit. Let's come back into resistance right through there. So you've been profitable, you've been negative, you've been break even. Let's see what happens. Just letting it go. That's all we're doing. Okay, so now we've broken past here. We're up 1.3% or so, a little bit over. Here at this point, you could set it to break even. Okay. And that would have just been taken out of break even. Again, depends how you managed it. Oh, it's 400 pips. Depends how you managed it. Either break even or small loss or small win, something like that. Or you could have just closed your trade there. Personal preference. Mine would be close to break even though. So I'm going to close that right now, break even. And we were just waiting for a trend to start. Right now, there's no trend. The market's sort of to consolidation, right? So we just got to wait for some sort of trend to start. If it breaks above, ideally, that's what we want because we're above the 200 EMA. Breaks above, retest, sure, we start buying it. Otherwise, for a real trend to start, I want to see this break. So right now, again, it's gone back into consolidation through here. So we either want to break above, retest, or break below, retest, and continuation to the downside, right? Here we go. So I'm going to go 180 pip stop. So remember how I talked about after a few months consolidation, okay, on the fresh break and retest after consolidation for a month or two, you're not going to likely get oversold. Very unlikely. But you can take it based on the break, retest, nice little rejection, bullish engulfer. We're going to buy that, right? And we're just going to see what happens. So in consolidation, my trend system doesn't work very well at all. So I just missed the trade there actually. There was a potential trade lining up, but we're not going to take it now because it's kind of cheating because we know it kind of worked out. But it's possibly lining back up here. So price is coming down to support. If it breaks above here, you could look at entering it. There you go. So that could be entry right through there with a 200 pip stop. I'm not going to take it now, but that could possibly be an entry. And you probably wouldn't even stop down on that one anyway. That doesn't matter. That's the point of backtesting. You got to know the statistics of your trading system, right? And this is what gives us statistics of our trading system. We know that each setup we take, we're going to see the consecutive losses, consecutive wins, a drawdown, all that sort of stuff. And we'll show that. We'll go one more trade and then we'll do that, right? After whatever happens to this trade, we'll just sort of close it and we'll go on. All right, so I'm just going to continue holding this trade. When it breaks above, okay, cool. So now it's broken above. Just imagine my stop being there. If the market comes down to there, I will close it manually. Again, I don't know how to travel the stop loss on this. Continue to hold it. Multiple entries through here as well. I mean, that is a particular entry right itself there. But we're going to just continue to hold this. All right, now let's just move our stops. We're going to pretend it's there. All right, now we're going to move our stop. We're going to pretend it's there. So we've got about 1,000 pip trade on this one at the moment running. Okay, cool. Let's just close that. So now that we have all that, you have the information of your trading system, right? Now, obviously, when I backtest over 1,000 trades, or 500, sorry, 500 minimum, but ideally you want 1,000. That way you get to understand that how does this perform a long period of time. Now, in saying that, right, this was very quick. Ideally though, I mean, in reality, that trade where we took down here, the 1,000 pip, that would have been running for quite a few months. So probably not too easy for a lot of people to handle. All right, so it ran from the 1st all the way till the 4th. So we just backtested 1 year's worth of trading data, okay? 1 full year of trading data, okay? And we're gonna have a look at the results just on the euro dollar in 1 year using this trading system. All right, so I'm just gonna quickly stop sharing just to, when I save this, I don't want anyone to see my personal information. Euro dollar webinar. Report saved. Now let's go through and let's have a look. So this is the backtest results over how many trades have we backtest? I don't even know how many we backtest over. It's just basically 1 year's worth of data. It was 14 trades. Yeah, 14 trades. All right. So out of total 14 trades, you can see that our maximum drawdown was, our maximum, that was 2.66%. Net profit of 18,000, gross loss of 4,539. Consecutive losses in a row, 3 losses in a row. Consecutive winners in a row, 2 winners in a row. So yeah, this gives you all the data, right? And you can see that the equity and the balance grow, okay? So when I talk about equity and balance, you guys know I talk about equity and balance in webinars. Now, if you were to backtest this over 1,000 trades, and we're not going to do 1,000 trades right now, because obviously we've been doing this for 30 minutes now. 1,000 trades, you might have one that looks a little bit more like this. And this is really, in reality, what my actual equity and account balance look like is more. So let's say we started the 100,000, where it is, let's say there. Account balance might be down here. Let's say 110,000, but equity is up here. And that's because when I'm trading, right, I look to hold trades, trail my stops, and I look to hold as long as I can. So my equity I'm holding, technically my account may be in the negative for a month or 2 or 3 months, which doesn't bother me. Technically, it looks like a drawdown on paper, but the green line is up here. That's the equity. So I might be, let's say we start with $100,000 account. My account might be down at $95,000, so 5% drawdown. However, in profit, I might be 110, 115,000 because of my whole equity. On paper, right, it looks like it's in a negative. In reality, you're actually in profit. To close that equity, account balance would sort of have a big shoot up. And that's what you can see has happened in these points right through there mostly. So yeah, that's a little bit of back testing. Again, this is 14 trades over 1 year, which resulted in 18% return, 18.164% return. Not bad for one trading, the one what do you call it? One currency pair in 1 year. Now you multiply that across how many pairs you trade. It could be 15 pairs, could be 10 trades, 20 trades. You know, it's going to look a lot better as well. Do you guys understand why I like, you know, sort of a little bit sort of more understanding now of just the entries and that. So we're going to do a lot more of this. I actually like this program. This is a really good backtesting program. So I want to do a lot more of it. So yeah, hopefully you guys actually enjoyed that and enjoyed seeing the, you know, just the trailing, all that sort of stuff, how we sort of manage the trade, where we enter, where we exit, what we're looking for. In saying all that, you can see when the trading system does work and when it doesn't work. When it works, my trading system, it's all about holding the trends. That's where you make the money, right? In this period here. Where you lose, where you go into drawdown is in this period here, right? Now this can last for months and you might feel like a whole month's gone by and, you know, you might be in drawdown, you might be, you know, feeling crap because you've lost and that sort of stuff. But once you get one of these, as you saw, one of these and a few of them throughout the year that make up for it, your account just explodes. And that's really what my trading system is all about. It's just looking for the big trends and just carrying on with those trends. So when we go into live markets, yeah, would you recommend this system on day trading time? Jenna, yeah, I mean, yeah, I do. Look, everyone's always asked me, does this, and a million times I always say, yes, it does. This is a 4-hour time frame. I only test it on the 4-hour. Now I use it on the daily 4-hour personally. You can use it on the 4-hour, 1 hour. You can use it on the 1 hour, 15 minute. The price moves the exact same from the daily to the monthly to the 1 minute chart. The only difference is you're going to see more real trends on the daily. On the 1 hour or the 1 minute time frame, you might get a lot of trends that aren't going to last as long, right? The 1 minute time frame, you're going to get a lot more noise. You get little trends here and there, but they might only be 20 pip, 30 pip trends. On, you know, when you actually look at it though, it might look like this on the 1 minute time frame, but it's only like, you know, 30 pips. Whereas I'm trying to cash to the 2, 3, 4, 5, 600 to 1,000 pips on my trades. That's the only difference. So just and be prepared to lose a lot more. In saying that, when I say a lot more, take more losses on lower timeframes. And that's because one, tighter stop loss, fluctuation, and all that sort of stuff. It's called soft Forex. So that's what it's called. Forget the, that's what it's called. Really cool backtesting program. Lachlan showed it to me. And actually like, because I used to use, well, TradingView sucks, but I used to use Forex Tester 3. And this one's actually really cool. I haven't found any problems with it as so yet, but yeah. Guys, we'll leave it there. I'm going to run. Everyone's coming to the office now and I'm going to go do some stuff. Guys, take care. Hopefully you guys enjoyed it and we'll see you tomorrow's webinar. Cheers, guys.